You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Good afternoon, everybody. Welcome to Master Trader Live. We're going to talk about multiple time frames. This is a big one. It really is, because the more information you add to what you're interpreting, the more difficult it becomes to make a decision. Just normal, common sense. And as an intraday trader, you could really lay it on thick to where it could cause severe brain damage looking at too many time frames. And that was part of my journey at the beginning, where I truly didn't understand things like candlesticks, which were nothing more than a representation of high, low, and close, and was the open above the close and whatever. And you get into all of this mumbo jumbo about different names and so on, and interpretation. So when I had some successful trades and I saw, oh, that type of pattern, that bottoming tail boy, that type of reversal, or whatever it was called, that was a really great setup. And then I didn't see the setup and prices would move anyway. I was like, oh, damn, it wasn't on the 5-minute chart. It was on the 3-minute chart or the 8-minute chart. And before you knew it, I was looking at, 8 different time frames and totally getting confused between that and the indicators and so on. It was really frustrating and I guess emotionally debilitating, because you're trying so hard to do something and do it well. And no matter what you do, it's just so, you have these ups and then downs, and that's the cycles you go through. So limiting the amount of time frames you look at, which is what we're going to talk about, and how to do that, becomes essential to being able to interpret, what's happening with a few time frames, getting a big picture bias, taking that into a smaller time frame where we can utilize one time frame if, that was part of our moving average discussion and on a prior MT Live. But, we were talking here before we got started with the show about less is more. And the more you look at, the more difficult it is to make a decision. And the other side of that is, well, I don't want to miss anything, because if I have something that's useful to me, I don't want to do without it, because that could be the difference. So there's all these psychological little demons that are playing out there, and you have to come to a conclusion as to what is essential to use and what I really don't need, that isn't going to make that much of a difference. So that's what we're going to do. And let's get into it.
Good afternoon, everyone. All right, yeah, fantastic subject here. And Greg, do you remember I made a mention when we were putting together the moving average one? And that's part of the reason we teach. We love it, and it keeps us sharper, as I characterize it. But I've been at this full time 2-3 years, and I make these things, and I sent you the file this morning. And I had to condense this from like 80 pages, and we're still not going to get through everything, but they just jump out at you, these concepts, and it makes us appreciate them even more. Now, here we'll go right to our, this slide, which we start with every time, because this is our approach. We're price-based pattern traders. Everything else is secondary. But it's the concepts that we put together that we conclude that it's a high probability setup. And my little laptop that I use in the green room, and I have 6 screens here, and multiple time frame analysis is an integral part of what we do, obviously. But when we look at every single slide, it's just instant. It jumps out at you. And as you said, you can use the moving averages also as a guide, and I'll let you cover that in a moment. So, you know, we have these patterns. This is a beautiful slide. Every one of these 9 little pictures are bullish arrangement of candlesticks. And now we take that price candlestick and then we put it in the context of these other concepts. Okay, so where is it in the trend? What time frame are you looking at, and do the other time frames support your bias to move forward? Is that pattern on support or resistance, volume? It's secondary. We can talk about that another time. What are the broader markets doing? Market internals. And then this is all that trading is. Once you have a high probability setup, you enter and you manage in between. Greg was on here pre-show talking to a few folks about the importance of money management, et cetera. And he's right, it's so key. So today we'll obviously be talking about, it doesn't matter what setup that we see. Today's session, we're going to take that setup and we're going to put it in multiple time frames to make that setup even more powerful, more potent.
So Dan, before you've got a lot of slides I can see.
Oh, no, we aren't going to get through them all. Don't worry.
I have to go too fast.
It's going to be like you say, it's the same but different. Once we show a couple, I could show you 500 slides. It's the
Right.
same but different.
So on this slide, you said it doesn't matter what you see, and that's correct. If you understand that these are all about different types of reversals or retracements, and that's why, this one here says it doesn't matter what you call it. It doesn't matter what you call it because it's going to go up, because this went down and it went up, and this went down and it went up, and this, well, it went sideways, but in a sense, this went down and it went up, and this went down and it's starting to go up. So they're the same, they're different, but the same in that we're looking at things that tell us that there's been a reversal, which we have to put in the context of today. We're going to talk about multiple time frames. And this was a big aha moment for myself in that what I was talking about earlier. I don't have to look at all these different time frames because I understand that these two things mean the same, and this means the same. If I compress the data, it looks like this. If I open it up, it could look like this.
Well, okay, so we're talking about multiple time frames. Explain what you just said, condense the data.
Right. So this could be, let's say it's a 15-minute chart, and this is a 5-minute chart, and this is a 10-minute chart. I don't need to look at all those time frames. I need to know the trend that's happening. That was our multiple time frame moving average discussion and all. But if I see any of these pictures in alignment with my bias, they all tell me it went down and it's going up.
So I'm just showing you this because, and this was another MT Live, obviously, we're talking about trends and trend quality and what patterns do we trade in the different trends. But I also like saying that this is a great starting point of teaching an 8-year-old how to trade. We teach them what candlesticks are, supply and demand. And we say, look, just like say, little Johnny, these are the only 7 events that the market can do. So once I teach you how to identify which of these 7 categories you're in, now I'm going to teach you the proper tools to use in each category. And so I bolded this on top here because that's today's session. Whatever we're looking at, they all might be in uptrends, but they could be trending on different time frames. And we're going to show you now how they don't have to be trending the same, but it's this bolded one here. But let's just start at the top. We want the bias to be in agreement, the multiple time frame bias to be in agreement. That's kind of the key of today's session. And we're going to teach you how to easily determine that. Swing trading, we're trying to generate income, 2 to 10 day moves. And that's the prior slide. It can be either one of those. So our main trading bias, the setup, when you're swing trading, has to come from the daily time frame. So those 9 pictures that we just showed you, that's the daily chart. And I want it to be a compelling setup. A couple of weeks out, we have an MT Live on our top trading setups. So that's what my daily time frame is. So now multiple time frame analysis, here's the key. You want whatever time frame you're trading, you want to go up one time frame. It does not have to be in the same trend or the same pattern. You just want the bias of the bigger time frame to be in agreement with your time frame bias of the dailies. That's simple, folks. So sometimes it would say, yeah, I like the daily, but you got a climactic sell setup on the weekly. So you're fighting the bias there. Position trading, that's the focus of our ETF trader. It's holding periods from weeks to months. We want big targets. We're using bigger time frames. The compelling pattern comes off the weekly. And then we look one up, we look at the monthly, and that has to support the bias of the weekly. If we're talking about day trading, you get to pick which time frame you want to trade. You could say, I'm a 15-minute time frame trader. I want my pictures, the 9 pictures above, to be on the 15-minute chart. And I was like, okay. So then you don't want to fight the bias of the hourly. And then we also say you can then drop down one time frame to perfect your entry. So, sometimes, Greg, people, they look at our concepts of putting them all together and like, oh, you already have given me a headache. And that's not the case. It's just those concepts is what the textbook objective approach is. And once you get the seasoning, you and I, when we look at a chart, the way whatever you have set up on your big screen or your laptop, the bias comes to us in 1/8 of a second. But that's part of the seasoning. So if you could say, well, I want to trade the 5-minute chart. Fine. Don't fade the 15 and you can drop down to a 2-minute for your entry. So it's really simple. We're just giving you 3 time frames, whichever one you're trading, go up, don't fade. You can go down 1 for an entry, manage in between. So Greg, if you want to put a couple little words on here, recently we had an MT Live on moving averages, and this is just, we're going to show you the actual chart and all these examples, but this is a way that Greg came up with in the moving averages that we use to speed up the analysis and to give you valuable information of what the trends are on different time frames.
Right. I like to call them intelligent moving averages versus, just looking at something, moving average crossovers. So moving averages relate to multiple time frames. And someone was asking me in YouTube about intraday, how do you pick what it is? So I explained that I use the 60, because I'm on higher time frame. I use the 60 for is where support and resistance, significant support and resistance, or is there a void? And then from there, I use the 5-minute with a 20, a 60, and a 200. And the 60 is equal to the 20 on the 15-minute, and the 200 is pretty close equal to the 20 on the 60. And the ideal scenario is if prices are above those moving averages and just starting to move away from them or down from them. And then, of course, there's a trending, and that tells me if all those time frames are in alignment or not. Now, on the daily time frame, we use the 20, the 50, and the 200. And again, that will tell me about the daily, the weekly, and the monthly time frame. Are they all trending in the same direction, or are they all going in different directions? Are they all intertwined with each other like a spaghetti screen? So having multiple time frames in alignment or partially in alignment. So for swing trading, I'd want at least the daily and weekly aligned. And then we look for patterns or entry points that set up on your daily time frame.
Let's hit some examples. So that was foundation here. So I'm going to show you 2 pages here in beautiful alignment. So daily chart, I'm trading the daily. What's the pattern here? Well, it's a buy setup and reversal on minor support and a strong uptrend. So we buy over this red bar's high, stop under the low, manage in between. Let's see what the bigger time frames look like. So I should have put a star here. So this breakout occurred right here, the same breakout that I just showed you. And then the monthly was also a breakout from a big bottoming pattern, W bottom, going sideways at resistance with a price void. So when people ask us, Greg, well, how do you all know what makes, why do you call something a core trade versus swing trade? This is the key. It's a price void on multiple time frames with the bigger time frames in agreement. So this, although we entered on the daily, so it's a little bit contrary to what I just said, Greg, right? I said a slide ago that the pattern comes from the weekly, the monthly has to support it, and then I go down to get my entry. I just happened to find this one in reverse order. I found this one, hey, I'm ready to swing trade this. And then when I went to the higher time frames, I'm like, wait a minute, Batman, this is a core trade. And so I label it as a core trade, give it the proper stop and manage it accordingly to a core trade.
The pattern doesn't have to come from the higher time frame. Your pattern comes from the lower time frame and where you're going to act. Whether the higher time frame, is it a bottoming pattern, but essentially in this case, has it turned up? And the concept of a void, which some might be scratching their head and going, what is he talking about, a void? Everything in technical analysis, well, we talk about support and resistance and trends and so on and patterns. It's about supply and demand. So the void concept is one in which there is no overhead supply, or there's very little. So this has this little point here, but this bottoming pattern suggests that it can get through it. And so now to getting through here, there is no supply because of the rapid movement to the downside. There's no congestion areas here. So when we look to sell our winners, we usually say, oh, here's some pivot high or some reference point or some congestion area. There'll be sellers there. That means there's going to be supply there. So I want to sell there. Well, if there's no reference point, that says that the odds are that prices can trend. So we have this big picture bias that prices can go higher until they reach something or create something new.
And guess what, Greg? I just looked and it went to $25 last week, right where you had your little squiggly line. And so you're going to see, folks, but that's why we spend some time on the basics here. In the first couple of slides, we'll spend some more time, but it's going to be the same. But you just have to nail in the concept. So here's a daily chart, just crazy move, going sideways in a trading range. The power of the moving averages. Greg, that was a fantastic MT live we did a couple of weeks ago on that. They're curling down. This is bearish consolidation. It's like it's holding on by the skin of his fingers here. There's nothing to the left. Look at the weekly, cracked right here at this, here's my 140, cracked on the weekly with a price void. There's, and then whether you call something a swing or a core, sometimes don't even worry about the name. I call it a pig target. So this head and shoulders breakdown in this fluid move up, there's no support to the left. I think I gave a target of $100 on this one. Short at 140, things going to 100.
And it's an assumption that we make when there's a void.
And we just manage in between. So could it fall $5 and stop us out? Of course it can. We're pattern traders. But so now that we're in the trade, this is very bearish price action that we talk about in our trend MT live. You got red bar, you got, it can't bounce. You got green bars ignored. That's nasty. I don't know where this thing finally bottomed. This was a recent trade we did on MGM. And again, multiple time frames, but now we're going to switch to the entry on the daily. So bullish time consolidation here. What started getting our attention was this nice green bar in time consolidation. I got a rising 20, rising 50, and then I have a gap up this particular day. Whatever the news was, I don't care. And so, Greg, you tell them about this 15-minute chart. It was just fantastic. And yeah, I marked pre-market here for us. So, we gave this to our subscribers. That's what this Telegram alert is. And it, says here we made 14% in 6 days. But now we were swing trading it, but now we're going down a time frame for our entry.
Right. Now, everybody realize that this is Dan's choice to put this on here. Someone in YouTube is asking me about pre-market data on a 60-minute chart. I don't use pre-market data on my stock charts. It's a choice. It's not a right or wrong. I don't need it. So I don't need to see this. All right. If you're looking for an entry, which I'm pretty much not, like within the first couple of minutes. If you're looking to use an entry in the first few minutes, odds are you're not going to use a 15-minute chart. You're going to use something smaller. And this could be helpful initially. But on a futures market, I do look at what's happening pre-market because it's much more active. So at this point where the buy setup is, this is meaningless to me at that point. It's done anyway. But as this pulls back and begins to turn, I can see that that's my entry point. Because it's the kind of pattern that we trade.
All right, so I have a weekly chart here. It's just gotten creamed. Beautiful multi-month bottoming pattern. Broke out, pullback, wide range igniting and going sideways. Let's see now what the daily chart looks like. So where I'm pointing there is $29. It's right in here. On this, so it rallied up here on this star and it's consolidating with a price void. So now get me on board on the daily chart. And, I have a big blue arrow there showing you where we got in. So this igniting bar, what's the weekly igniting bar? So, obviously a weekly bar is 5 daily bars, right? So these daily sideways bars on the weekly is this bullish consolidation in the upper half of this wide range bar. It wasn't until the gap breakout that it got our attention that it was time to strike.
So what we're looking at here and how we interpret it, this 50 MA is equal to the 10 on the weekly. So you don't need to go necessarily look at the weekly. We do, but that the weekly has turned up because this green line, the 50 MA, is pointing higher, and this is pointing higher. So this pattern, this igniting pattern on volume, and this little retracement here, when we get into bar by bar analysis, this 180 reversal and the red bar is ignored. This is call it whatever you want. It's a bullish pattern. And so if it clears these highs, it signals that it's going to go up. So you can call it anything. As we recognize that using bar by bar analysis in the multiple time frames that should go higher.
Yep, and the weekly had a price void. So that's why we said, I want a big target on this one. Mm-hmm. Could somebody say, well, Dan, I don't care about your big target. I want to swing trade it. Not one problem with that at all. The bigger time frame is still supportive of the bullish pattern on the daily. But this is how we determine big targets is the price void on the bigger time frames.
No, yeah, one of the, just as you're flipping back and forth, gave me the thought, one of the reasons that we look at the higher time frame also is that I can see further what's happened in the past. So unless I scrunch up my daily time frame to see what's over there, I can look at a higher time frame that's condensed the data, and I can see what happened weeks or months ago, where I can't see it on the daily time frame unless I really squash it.
Absolutely. Tilray marijuana stock, we call him Tilray Dog because he's earned that name. He actually topped out at $300, but let's start here. Nasty 100% retracement, failed breakout here, trading range, declining 20, declining 50, closing breakdown. Closing breakdown. That closing breakdown was right where this blue arrow. This is an ugly 180 reversal, sideways consolidation, closing breakdown, price void. Folks, I have a permanent thumbnail on Tilray Dog. He's $12 right now. We entered this, whatever, $75. That told us, look, this tail is real. It went to $300 in one day. It doubled. Hershey here broke down, and the pattern is a sell setup. I got my 20 and 50 curling, breakout failure, and it's a sell setup. That's a compelling daily chart. So could I trade just off this chart alone? Sure you can. But today's subject is let's see what multiple time frames are. Where we entered this sell setup on the daily chart was a big M top on the weekly. So that supported a top. On the monthly chart, it's a climactic sell setup with a price void. So all three in beautiful alignment.
And I would say, looking at that, let's say we didn't have this bar there, and we looked at this monthly time frame, this would give me a bias. Now, we could short it under the low. We could just trade it from that time frame with a stop up here.
Okay.
Looking at this run up as it did and this wide range bar, and then it's stalling, would lead me to think, right, a bias that a shorting opportunity is going to come on the daily time frame. And so this was in an uptrend, but when it forms the lower high, and I can see more details about what's happening here, as it breaks down and comes up, and now, this is a resistance area and we're getting a sell setup. I can go to the smaller time frame with, I would say, intelligent information from a higher time frame that this is what should happen.
Yep.
Right? So one of the things, Dan, we were talking in the green room yesterday, and we were kind of talking about bar by bar analysis in a way of saying, well, we were talking about a pattern. And what I said was, well, based on what we see now, what should happen and what shouldn't happen. So, I think we were talking about moving stops. And so as patterns form, as we related to this, before this bar formed, this extended climactic type of sell setup. Well, what should happen? Well, this could form something like this. It could come down here. It could come then back up and form a lower high. It should form some type of distribution pattern on the smaller time frame based on what I see on the higher time frame.
Do you remember what you were talking about? We can look at it later.
Janet asked me about something, and I was, yeah.
All right, so Nvidia here is Wall Street favorite, and it topped out yesterday. It had a gap to over $320, but this is where we got our subscribers in. Not saying we're still holding it, of course, but so big rounding bottom here. It's trading very sloppy, broke out, sloppy, And that's where we got in on this particular day. Look at the weekly was a breakout. The monthly was a wide range igniting from a W pattern with a price void. So I said 320, it blasted the new highs. But I got all time frames in alignment with a price void. Look over here. Momentum moved down, rebuilding, deep retracement. As Greg says, that's, part of a bottoming process.
It is.
Yeah. And now we broke out of this resistance and we're making a higher low.
Right.
So all three of these were in great alignment.
So what Dan was referring to was that bottoming stocks, they usually make this fantastic move that looks like it's going to the old highs, and it fails completely. And I've just seen it time and time again, primarily because I got caught in some of these, right, where I've given back a large part of my profit, thinking that, here's this stock that's oversold, it's cheap, and whatever, bottoming out, and it makes this big move and they come all the way back in again. And pattern recognition is about seeing something that happens over and over again. And we make an assumption that it's going to happen again. And so bottoming stocks tend to do this, where they make this fantastic move, they look great, and they crap out. And then they do like this, and they tighten up as this did, and it starts to turn back up again. So I don't fall in love with bottoming stocks, because I see what they do at the beginning of the move, and then eventually it takes longer for them to form a bigger base.
Detective saying, do we core short? The answer is absolutely correct. It's the same bottoming patterns, but in reverse with price voids, climactics. So we were doing tons of them in the year 2000. And actually, Detective asked me when we get back to the green room, we did give a core short on Boeing. Boeing was a climactic sell setup on the monthly and going sideways, breakdown, price void. And it was a home run of a core short Boeing. But yeah, absolutely we do. So now we're kind of getting into the same but different. This was a breakout on the daily. Here's my 15-minute chart, had a wide range igniting. And I like 15, the smaller time frame that you go down, the more aggressive the entry. Could this have been a 5-minute high entry? Without a doubt, because of this small little gap, breakout, inverse head and shoulders. And here's an alert. We give it to our subscriber. Actually, we did give this one earlier than a 15-minute high. How do I know that? Because it says it right here, buy over 705, which is right here. So I probably did give it a 5-minute high, and then it just took off. Greg, why don't you describe this one? This was a beautiful. There's so many concepts we can talk about on this chart, and that's why you've seen it before. We probably had this in the late day breakout, MT Live, so on and so forth. But we had the daily breakout, today's session, supporting the late day breakout on whatever stock this was, I forget. That's why we call it a no-brainer. This was a no-brainer late day breakout.
Yeah. And I really like these trade setups that set up after 2 o'clock.
Yeah.
For me, that's part of the bread and butter in day trading, because you get more information that's developed, throughout the trading day. So, this daily chart in our moving average discussion would have shown how they come together, which means the daily and weekly timeframes are coming together and the price pattern is tightening up. That's what brings the moving averages together, because they were so far apart here. And it had this big move and came down, and you could see how the highs and lows get tighter together there. So as this starts to move up during the trading day, we think, oh, it can go up. I would say I'm automatically going to say that pivot high up there. And it got through it, I guess, earlier.
But let me interrupt you. So that pivot high of $51 happened in the morning.
Right. which is where I'm looking right here and where that high is. And so now intraday, what do we look for?
Bullish
Price
setup.
to go down, and it doesn't go down. That's bar by bar analysis. So when I look at something like this, what I was talking about a few minutes ago is like, what should happen based on this coming out of this consolidation and this monster move on a 15-minute chart, which created a void? It should create support. What does that mean? It creates a pivot on a 5-minute chart. That's going to be a pivot. And as it retested that area, so when I don't have pivots, I use bottoming tail bars. I look to the left and find a bottoming tail bar. And this bar, when I see the red bar, it says, whoa, that doesn't look good. What should happen? It should be ignored. It should go back up again in some way. It shouldn't break. It shouldn't come down here. This is the thought process. And okay, it did that. Am I ready to buy it? It's 12:30. I'm hungry. Gonna go eat. I might miss the trade. But it waited for me where it caught up with the 20 MA, which I don't know why this works, but I've been looking at that for 30 years. And for whatever reason, price is catching up to the 20, self-fulfilling prophecy, I guess. And, that's your breakout after 2 o'clock, 2:15. And if this was a 5-minute, you'd have the way I look at the 5, the 20 and the 60 coming together, because the 60 the same as the 20 on the 15-minute chart, right? So that's the 20 MA on the 15. So on the 5, that would have the 60 up against the prices here. You'd have the 20 curling up here. It would be a textbook, which is right in the gap course, textbook afternoon trade.
Absolutely.
On the 5-minute chart to buy that.
And that's what, again, trading's all about, right? Having our concepts, having the confidence to know that it's a high probability setup, and then executing and managing per your trading plans. All trading is. So, I like inviting people here, obviously, Greg, because our green trading room is where we walk the talk. We're showing these beautiful slides. Come visit us. We give you a no-brainer 7-day trial, $7 trial for 5 trading days. And we're reacting and we're commenting in real time, where we're not looking at the past, we're looking at the future, but it's based on the information in front of our eyes. And we scan together, trade together, answer questions, educational, we laugh together. It's a great place to come check us out. We got a couple more minutes here before we'll switch to real slides, the real market here, and answer questions. But like I said, I could show you 100 more examples. We had a breakout here. Here's another wide range consolidation, big bottoming pattern on the monthly. So right on this bar right here is where we're getting in on this. So that little bar that I just pointed to was this move. And then here's our daily entry. And this thing's went from $100 to $6. And it's a bottoming pattern for 2 years. So this is a potential core trade to us. Same but different, blasted off, bottoming pattern, bottoming tails. The weekly was an igniting breakout. The monthly is a breakout, all-time highs, nothing to the left, same but different. AR, let's see, where did we buy this thing? We bought way the heck down here as a core trade. So we bought this breakout. And then you can see these are our comments here. And then here's the longer time frames. Another bottoming pattern above the 20. And we bought this wide range breakout bar on the weekly. And then it's this wide range breakout on the monthly. Look at this big core. Look at this big price void. This some of these charts I can just copy and paste and put them in our MT live of properly buying bottoming patterns. Daily, weekly, monthly. It's the same concept.
Yeah, go back to the prior slide for a second. just wanted to point out that these comments that you see here, this is what Dan posts. They're posted in the member area. There's a spreadsheet with all open trades and closed trades with comments that are there, entry points, profit or loss. It's all there, as well as in Telegram. So even if you're not in the room with us in the green room, they're going to get posted in with a chart in Telegram, essentially real time, why something is being done with the entry point, with the stop. The management gets updated, comes in your phone, or you could have it on your desktop as well, or both. So all of these comments that come throughout the trading day about what to do, how to manage it, take profits, sell half, raise the stop, and so on. Two places. It gets text to you, as well as it's in the member area where you could read the spreadsheet, and all the closed trades are there and open trades.
Yeah, so look, so it was a core trade, see, core long, a wide range breakout, daily, weekly, monthly. That's the reason. So here we just sold a third for 41% return. We let it pivot, we let it move up, and then this particular day, I moved the stop right here on 128, move stop 670. So we still have 2/3 of our position that we're managing because it has a big target. Same but different. Daily, wide range breakout, weekly, kind of a sloppy bottoming pattern, but it went sideways here and broke out with a price void. VLO, little oil stock that we gave to our advisory. So Greg, look at these amazing moving averages. Tell them what's going on there.
And tight. So what that's communicating, and by the way, just John Monte, we're not ignoring you. I just saw that you had posted things in the Q&A. You can post them right in the chat so everybody can see it. But what was happening here, and he was asking me, do we trade options? Yes. Dan is a big option trader. And does it apply to indices and ETFs? Absolutely. It's universal and to futures, to everything. So what we see here and how we use intelligent moving averages is, this is telling me what's happening on the daily, which I can see, it's a daily chart, what's happening on the weekly, right? The 50 MA, same as the 10, and what's happening on the monthly, 10 MA on the monthly, same as the 200. So I have all time frames coming together here where they were all pointing down. You see the big retracement. Moving averages have to be pulled along like a dog on a leash. Right? It has to bring the moving averages up, but slowly they have to come up. And then as they all tighten up, and bar by bar analysis, I can see what's happening. It suggests that there's the potential for a larger move. We got to look to the left if there's a void, but with multiple time frame alignment. Right? All those time frames are coming together. So, and what does that mean? I mean, from a psychological point of view and a supply demand point of view, is that you have multiple strategies, right? Multiple institutions and traders that are using different timeframes are coming together with a similar bias. And that's what makes these explosive moves. When you see a picture like that with the void and moving averages tighten that way, it's not about the moving averages. It's about people and supply and demand coming together at an inflection point. That's what those moving averages are communicating to you.
And then here's our big price void. So, yep. All right, we're done. So this is Greg's amazing swing trading course that it has all the concepts that we showed you on the first slide. He puts them together in a logical manner. So I say at the end of the course, you have the textbook knowledge to understand price action, patterns, how to manage. He gets into trader psychology, keeping a journal. There's just go to the website and look at the modules there. But this, whether you're trading stocks or options, since options, our approach is based on a technical pattern, I send people here all the time. Unless you're just wanting maybe to do some credit spreads, take the credit spread course. If you're wanting to be a successful option trader, then you need to understand price action. That's that course. And then here's just another link that outlines our offerings in different categories. And we sent Thanksgiving coming up. We have some fantastic specials, Black Friday specials. We're calling them the same as the industry does, but it's the best prices of the whole year. I urge you to check out the combinations that we're offering there.
Yeah, they'll be coming out shortly. There's one going to be coming out for those that maybe have the swing course or one of the mastering course or an advanced credit spread course, where the full courses with everything there are going to be on special, that we never, I shouldn't say never, rarely, if ever, discount the full courses, but the prices are going to be great. And then all the courses and the chat room and the letters, everything will be on special. So those are all be coming out, and we just have so many people just sign up for the green room for the annual at this time of year. So that'll all be coming out shortly.
All right, awesome. Let's take a look at the markets. I see what 15-minute charts are cracking here, and we've been rightfully selling a lot of bear call credit spreads since the market is toppy and started turning the last day or two.
Yeah, I promised Don that we'd look at some 5-minute charts, and I mentioned this a few times about 5-minute charts. This is how I look at anything in intraday on a 5-minute chart. I look at the hourly, where there's larger areas of support and resistance, but I set it up just like this, and with the intelligent moving averages 20, 60, 200, which means I'm looking at obviously the 5-minute, the 15-minute, and the hourly. And this is pointing down. Does it have a void? It should keep going down. That's my bias. And here I've got Tesla on here, and that's not going down. You've got the hourly in a downtrend, but you've got the 5-minute that's kind of up but flattened out, and the 15-minute 20 MA is flat over here, so it's caught between those time frames. So I'm just staying away. I'm just showing you the difference on a 5-minute chart, how we're looking at multiple time frames utilizing these moving averages. And then, of course, is there a void? Now, spiders have closed the void. It's likely going to stabilize. And because this is going to stabilize, and it may come down and break the low, a lot of times they do that, probably the Qs are going to stabilize here pretty soon. But this would have been the place to place a short, break down what was support becomes resistance, same old stuff, up against toward the 20, topping tails, and so on. Now looking at dailies, go here, and someone wanted to look at Boeing, I think, Dan.
We'll do it in the green. Well, yeah, look at Boeing because it's a beautiful daily reversal, but Detective was asking about a core long, and I'll show him that a couple of years ago where we shorted it.
Yeah.
Or you can show them now. Just pull up a monthly. It's easy to see. There's a major topping pattern. Look at that big old head and shoulders with a price void.
Yeah. Here it might be bottoming. I don't know.
Right. That's what I was saying. The daily had a big fat bar until 20 minutes ago.
Yeah. So maybe it's bottoming, but it's caught between support and resistance. So good for credit spreads.
Yeah.
Not good for directional trading.
Right.
Greg, I'm interested in copies of those TC 2000 tabs. Do you send those all at once? As long as you're a member, Arnold, you're welcome to anything I have in TC 2000. We don't charge for that. You have to be a member of Master Trader or a student. And I'll give you any of this. It's worth, I'm sure, quite a bit, but we're not greedy. What else should we look at? Do you take entry and stop loss on the 5-minute close to the entry? He asked me. near the 20 MA on the 5-minute, yes. Look for entry points on the 5-minute and then manage it from there. Greg, do you have W and M top scans? I don't, Don. I don't. I'm not sure how to do that. I don't know if, in the TC 2000 forum, there was this fella, Doug, who was amazing, great help. And he wasn't there anymore after coronavirus started. And I don't know if they brought him back, but he was like a gold for a guy. Hey, Doug, I want to do this. Show me how to do it, and he'd give you some basics. Or I seen him do stuff for people that was like really very involved. But I'm sure that it's a way to do it in TC 2000. I know there is. I just don't know how to do it. I'll have to figure it out. Twitter.
Looks
That looks
horrible.
kind of nasty. I haven't looked at that in a while.
Me either. Horrible.
I mean, it's a little extended here to the downside, but look.
But the more bars, it can't bounce.
Yeah. It got extended. It looked like maybe it was going to bounce and it couldn't. And it looks like it's going down here.
Yeah.
Good for Twitter. PayPal, honey. PYP. Yeah, it got killed. We know that. So look, what do we do when we see something like this? The trend is down. We assume it's going to keep going down. And there's a significant support area down here. And so as an area, let's say somewhere in there, it should stabilize.
Yep.
Pretty wide. I don't know where, 200, big number. Maybe it stops there. One of the things we could look at is open interest at 200 and see the puts and see if it's got a big open interest. So it's pretty big relative. It's clustered there. About 8,000 is about the biggest that we see in this area. So it would likely, it's going to stall at that $200 level, whole number and a large open interest. There isn't really a lot of support there as we look over here, but it's in that clustered area. All right, what else we could look at here? Well, anything that's on here. And we start looking at, I know this is going down in multiple time frames. Well, I could switch to this page and we could look at multiple time frames. And so these are going higher. Well, that gapped up. Also Broadcom, obviously in an uptrend, multiple time frames, all the moving averages, but it's spread apart. It's extended like a lot of stuff is. So we have to wait for this to consolidate a little bit. There's nothing here yet to say to go long. I'm not sure how much it'll come down or whether it'll chop around over here. But on the 5-minute, right, this is shortable. Maybe not in this moment, but based on how I look at the 5-minute, it's below all the moving averages. Right? It was higher. It's really at the open here, but ideally I'm looking for stuff that is below the open and the close, and these moving averages are pointing down. So the takeaway here is, even though everything is bullish on multiple time frames, right, daily, monthly, and weekly, the fact that it's a little extended, and the probability is that it probably pulls back a bit more before buyers get aggressive again, I could look at this intraday as a short. I could certainly look at things that are already going lower and look for setups there. So we could always find ideas with these scans. I was asking about Wendy's. I guess earnings today. Yeah.
Yes.
Reported earnings. That gap down. So, yeah, looks like it's going to go lower. I mean, this is so bearish when something's been going sideways and having bottoming action like this, and it gaps down underneath all of that because all of these buyers now are holding losses and they want out. And that's what brings supply in. And so now that we've got that bias, now we look to the left and say, where might it stop? And even though there's a little support there, that might just be a pit stop before it just keeps going lower. So I don't want to buy it down there after this breakdown. Even if it bounces, how much is it going to bounce? No interest. Yeah, Costco, there's, so look, we may come back to something like Costco a few months from now and talk about topping patterns. Right, Dan? We don't know. I mean, maybe it keeps going to 700, but it's had a heck of a move. And the momentum is slowing down because this was, a monster move. And here you can see momentum slowed down. We don't use any indicators. We just look at the distance between the highs here. So we know momentum slowed down there. It doesn't tell us it's going to roll over and correct a bit, which it did. And now, just based on this big move and this, momentum slowed down some more. I guess it's at new all-time highs. There's nothing to the left there. So obviously this needs to correct a bit. And I don't know if that is the high, we'll know in a couple of months, or whether this is just a resting point before it continues to go higher. Bill's son's asking me a lot of questions here. For long, you look at all three MAs pointing up and prices are above them and vice versa. That is one setup, right? All the moving averages on the 5-minute, but they could all be, it could be above this and be very extended. And I could look at that as a short, or the 20 and the 5 could be pointing down and the 200 could be way down here, which also could lead me to say, hey, I'm going to short that because the hourly time frame, it must have gotten extended. If it's way above this 200 and the 200 is down here, it must have had a monster move and then rolled over for the 5 on the 5-minute for the 20 to be below the 60 and them to be pointing down. So prices don't have to be above all of them, but the ideal scenario is to be above all of them, the 20 and the 60 to be pointing up and above the opening price and yesterday's close. All right. What else can we look at, Dan? We can just start with
well, show them one more, and it's a trade we did the other day. MSTR, it took off with the Bitcoin, and it's on November 2nd. Show them how daily, weekly, monthly we're in beautiful alignment.
right here.
One to the right there.
Yeah. Yeah. So here's where it was setting up, where it pulled back to this pivot. And then it broke it and then began to turn around again. It's kind of like a little mini shakeout. That's why it would have gotten on the interest list.
So we entered on the 2nd, but show them how weekly, monthly we're just beautiful alignment. That's today's session.
You can see them here.
Can you expand it? Look at that. The weekly, they were both beautiful.
Here's the weekly bottoming out. You can see the monthly. We're compressing the information, and you see red bars being ignored, and it's got this void, which supports a bias that this is going to go higher.
Right. We've been selling puts on this thing every week, way out of the money, like at the 200 on the daily. Greg, I actually put it in the Facebook group the day we did it. I told them what we were doing.
So if today was a bottoming tail bar, I mean, ideally our bottoming tail bars take out the low and then they go back up again. So it's just an inside day right now, but this should continue to go higher. So Hey, thanks, Jerry. Glad you enjoyed it. Do we have a Facebook group? If you're a member, Arnold, yes, we have a Facebook group. So we don't accept people just come into the Master Trader group on Facebook, because you start getting people from, Malaysia and Lithuania, and people that just kind of want to come in there and sell some sunglasses or something. So you have to be a member of Master Trader to get in there. So John, weekly options trade is all credit spreads. Advisory letter is swing trades and options. All right, everybody, we'll be back next week. You can go to the MT Live page and sign
Thank
up
you for
for next
listening to
week.
Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.